All righty, traders. This is Blake Morrow. You are listening to the Daily Roundup. I hope everybody's having a great trading session. Happy hump day. We all be humping. That's right. That's it. Unless you've been married for a long time. Joking. Okay, all right. Enough of the, you guys think I'm a comedian here, but all right, let's sorry. This is a kids channel. Earmuffs, kids. Hugo said, hey, how much coffee? I had a few this morning. Taking me a while to wake up. You know, when I do the first daily round or the morning edge, holy cow, I'm still tired and yawning, but you know, this time of day I'm a little bit better. Alexander says coffee without sugar. I know, no sugar either. All right, let's talk a little bit. So this is the euro dollar. Notice where we're stalling. Notice that candle. It's a bearish gravestone doji on a 4-hour just for right now. Now, that's not saying it's going to stick that way. We've got another 30 minutes. I'm going to take this trend line. You see this one? Well, the previous bear flag pattern, right? Let's extend that out. Okay. So basically, I would say above 119, you know, it was a selling opportunity. Now, if we close, and I'm gonna leave it with this. If we close down here, let's call it 118.80. But then, if you guys aren't short the euro already, I've got a better average because I was short from yesterday at 118.30. I sold some more above 119 at 119.07, something like that. And I covered it, what I sold down here. And I've got basically my original position, just made back a little bit. But what I would be thinking if I didn't have a position, because, you know, when you add to a trade, the important thing for me is whenever you add to a trade like you haven't been in the trade, right? So if you're in, like, if you're short the euro and you're like, okay, I want to know when I want to, you know, add. Well, just pretend like you never even had a trade, and then you add to it. You just need to make sure you do the averaging. The averaging once you're in the trade, make sure you know, okay, my stops are here. I've got double the position, or more. And if you get stopped out, is that loss going to be acceptable to you and based on your account value and where you're at? So that's how I would approach it. So if you, like, let's say we close down here and then we start breaking back below the 70s, like let's say mid 70s, then at that point in time, you can say, all right, I'm willing to add to my trade, and you want to add to the short side of the euro. Put your stops above these highs, and then you get stopped out of the whole position. You know what your risk is at that point. As long as you can cope with that in your head, meaning, you know, you can reconcile that. You're like, I can take on that kind of risk. That's not excessive risk. Then, you know, that's how you add to a position, especially if it's losing. There are a lot of schools of thought when it comes to adding to losing positions or adding to winning positions. You know, preferably I like to add to gains, but that doesn't mean it's always going to be the case. It doesn't at all. I mean, you know, a lot of times you mistime something, but you're like, you feel that that's the right trade. Like, I know that the trend in the euro is lower. I know this is the right trade, at least in my mind at that moment. I want to add to it. As long as you can add to it and not put yourself in a adverse situation from a risk reward standpoint, and you're not over leveraging yourself, then do it. You know, as long as I like to, like, pre-plan my trades in a sense, you know, a lot of times too. So say, okay, well, I know the euro might bounce here. I'm gonna sell some at the 38% retracement. I want to sell some more at the 50% retracement. Should we get up there? You know, it's another way of attacking the market. All right, so just some food for thought. Hold on really quick. I just got to write down something. Okay. Let's go into the rest of the market, because I actually want to pull up some of the equity markets. So talking about the S&P, the S&P is, in my opinion, still range bound. I mean, we broke out of this triangle, we came back up. It's so in essence, we're still just building a consolidation. I think you could probably just kind of draw it like this and just say, okay, well, you know, right? Okay. So, you know, you could probably just leave it at that. You know, I still think that there's risk for some downside in equities, but let's follow some of the other markets too. You know, here's the NASDAQ just kind of consolidating, obviously up at, you know, this resistance zone that we've had drawn out for a while. I'm just going to extend that out. Say, okay, well, you know, there's your resistance zone, right? Same thing. Take the Dow. The Dow is actually near its lows of the session. So the Dow is actually showing some relative weakness, but you know, at the same time, you could say, all right, well, I see that it's showing a little bit of weakness here, but you know, in essence, we could be, you know, bull flagging. So you can't get too aggressively short risk right now, because you know, the markets are just basically consolidating recent gains. I know they're looking a little heavy, but that doesn't mean that they're, you know, they're going to trade lower at this point. The one chart that stuck out to me yesterday was obviously the gravestone doji in the DAX. Even though that's a white candle, you know, it's still a gravestone doji. We are, you know, just kind of you know, sitting sideways right now, but I wouldn't be surprised if the DAX starts to come down, you know, over the next day or two. But we need some help. You know, if you're trading the DAX, you need help from the U.S. indices, and right now, we're not seeing that as of yet. Couple other things we have to pay attention to. You notice the euro yen testing the highs and rejecting the highs. That's kind of important. You know, it's important if it breaks out. It's also important if we actually roll over. Another chart that we should be looking at is the dollar Canadian. I know Amanda just tweeted about it. Remember, this is the 50-day moving average, and frankly, the resistance here at 126.50 is a big one. You know, we break above that, and then we're going to be, you know, on our way towards the 200-day moving average, in my opinion. Yes, I've been long this forever. Yes, I'm talking my book. Yes, I think that that's happening. Yes, it's been building a nice base. You know, maybe this is a little complex inverted head and shoulder pattern now, but it's been building a nice base coming out of this wedge, but it needs help. Everything needs help right now. Everything needs help with equity markets moving lower. If we get equity markets dislodged from these levels and they move lower a little bit, it's going to help, like the dollar Canadian move higher. US dollar Norwegian kronas, you know, could pop up after testing the 78% retracement, this triangle support. Dollar Mexican pesos trying to, you know, firm up, but we're not going to get back above 2030 until we see stocks roll over a little bit. And frankly, I'm not 100% sure if that's the case, but I also have to point out that the Aussie's trading heavy, and the Aussie, let's not ignore the fact that the Aussie really rejected this channel, really close to, anyway, you know, 77 cents. I have orders out to sell the Aussie at 77 cents, never reached there overnight, but I still think we're developing this head and shoulder pattern. But again, this isn't going to break down unless the stock market starts to show some weakness. And do you see any weakness in stocks? Okay, let me reiterate. No, we're consolidating. NASDAQ? No, we're consolidating. Dow? No, we're consolidating. So do I see weakness in stocks? No. But man, if we got some, it'd be great. So Craig said, "Hey Blake, no thoughts on the FOMC minutes then?" No, I have some thoughts, and you know, that was, I was going to wrap it up with that, so I guess I will. As far as the FOMC minutes go, I'm not expecting anything new, but I'm going to give you the buts. But if you start to see comments from different Fed governors about the strength of the economy or the economy bouncing back, that's when you have to start going, you have to start thinking, hey, wait. Consensus may be that, we might have more of the market might start to price in a Fed rate hike by the end of, 2022. And if that's the case, that's a big deal. I know it's 2022 and it is what? It is 2021. And it's not even the midpoint 2021, but that's not the point. The point is that you go from first rate cuts in 2023 to 2022, and that those goalposts start to move. The market starts to get a little jittery. So, can they say something that might move the market a little bit, or can some of the minutes read a little bit more hawkish, and can it move the market? It absolutely can. Am I expecting it? I don't think anybody is. I don't think anybody's expecting, hawkish commentary, but, market's not the market. The economy has been bouncing back pretty strongly. And I think we've fared COVID much better than anyone has expected, at least here in the United States. Now, is that due to excessive monetary and fiscal policy of, our government and central banks? Yes, it is. But it doesn't change the fact that the US economy is doing better. And if Fed governors start seeing it like that, then that means the market's going to start anticipating that the Fed will pare back its bond purchases, and it's going to be a little bit tougher for President Biden. I haven't even called him president, I don't think yet. I don't think I've actually called him president. President Biden, it's going to be harder for him to pass, stimulus through Congress. If the economy's showing hope, right? So anyway, those are my thoughts, Craig. I'm not really expecting a lot, but the risk is out there. I don't think it's non-existent. I really don't. And I know a lot of you guys are waiting. And I think that's wise, because when you see a chart that looks like this on the euro, it is, like I said, I shorted some above 119 because of the 38% retracement. I already got out of it, but I'm looking at it through the lens of somebody who that's not in the trade. And would I add to a short euro dollar trade or buying dollars? I would. But I want to see the stock market really react. I want to see the stock market go, oh crap, something was said and the market's starting to come down, and that means the dollar is going to firm up, and then you trade it like that. You can also watch precious metals too if you really want to get a little bit of a clue here. Is just watch an intraday chart of like gold and silver. If you start to see gold and silver slip, then that means the dollar is probably going to strengthen too, or the euro dollar is going to weaken. So those are a couple of things that I'm looking at. Good luck today. The Fed meeting minutes will be out in just a little bit more than an hour's time. And I want to say once again, thank you guys for all the support. If you're watching this, on YouTube after the fact, come join us over at ForexAnalytix. And if you're watching on YouTube and you're like, man, that's some cool content, hey, give us the thumbs up too. Appreciate it. We all do. All right, guys, have a great one. I will talk to you in the chat rooms or tomorrow morning on Face. Good luck, everybody. Talk to you later. Bye-bye.